Hi guys, welcome back to Finpact. Today I want to talk about Clover Health investments. So Clover Health operates as a next-generation Medicare Advantage insurer, and it leverages Clover's flagship software platform, Clover Assistant. And this sort of helps America's seniors with highly affordable, obvious healthcare plans. Now, this might sound unexpected, but the problem is, in my opinion, is that Clover Health is gaining meme stock status, and it's one of the most trending meme stocks as of recently. Now, another problem was that they also ran into hospital controversies, and they've been facing legal issues from their investors. Now, this has been causing many analysts to downgrade their price expectations for Clover Health. Now, that's not to say that it won't be a good long-term investment, but that depends a lot on how Clover Health plays its cards from now onwards. So the current price for Clover Health is $8.16. As you can see here, if we look at the 5-year chart, it's sort of been trading sideways and it's really stabilized. Now, the current main consensus on TipRanks is that it should be a hold. And one analyst thinks it should be a buy, one a hold, and two a sell. In my personal opinion, I think currently it is a sell. I think the price will go down a bit further and then maybe people can buy the dip. But this is based on 4 Wall Street analyst offerings, and they have said that on the upside it can be $9.50, but on the lower side it can be $9. That's still higher than where we're at, so it could be a decent short-term trade. As you can see in this article on Markets Insider, JP Morgan downgrades Chamath Palihapitiya's backed Clover Health and expects the stock to flatline over the next 16 months, which is kind of what we were seeing on the graph anyway. You can see it has flatlined, and they think this should be fairly flat for the next 16 months. I mean, that's not ideal, especially if you want your investment to work for you. Then being expected to flatline for the next 16 months, I don't think is a great investment in my personal opinion. I think there are other stocks that could work for you. Now, this will obviously depend on how Clover Health will continue executing their business and how they will deal with the current hospital controversies and the legal issues. So we can see on this article on Yahoo Finance that Clover Health CEO speaks out for first time on hospital controversies. So like I said, it's now gained meme stock status, and it's battling lawsuits spurred by a report from short seller firm Hindenburg Research, alleging the company withheld information about legal issues from investors. So they didn't disclose important information to their investors. That probably meant that investors lost their trust in Clover Health amidst these issues, and that meant they may have withdrawn their positions. I believe that's why we've seen the stock price fall and also sort of flatline. So the CEO spoke about the controversy in an interview for the first time, and he said that the strategies used were to help save the urban hospitals, which care for an underserved population from bankruptcy. So he said that there is no lobbying voice for Medicaid patients, there's no lobbying voice for those who are uninsured, there's no lobbying voice for undocumented immigrants who seek out healthcare services. They tend to live a lot in those markets, and hospitals are required to, by law, to see everyone in the emergency room, even if a patient is undocumented. So he blamed it on what is known as a payer mix. So a combination of Medicaid, Medicare, and private insurance reimbursements that hospitals rely on for income for the imbalance in revenues. So that's a common complaint amongst basically hospital executives. So it seems like there's a blame game between healthcare providers, insurers, and the medical device companies, which continues as the political pressure mounts to find different ways to reduce ever-increasing costs of care. So it seems like they've run into that trouble. So let's see how they handle it going forward. I do think that if they handle this effectively, then their share price could see better returns in the future. But as of now, I personally am staying away just because it might be too risky. But this is also sentiment from many different people. Now, I know many of you guys don't like me using Motley Fool, but I just wanted to mention it because I saw this article where someone put why I sold Clover Health even though I like the stock long term. Now here's another article on Markets Insider which actually says the opposite, that Clover Health Investments isn't a long-term stock despite proof of concept. This is surprising because usually people allow that proof of concept to be translated into the future long-term price of a stock rather than the other way around. So it's interesting to see what this article's sentiment is. So on this article, they've emphasized how there was a lot of exuberance and around the whole SPAC wave, which we've probably all seen, that there was a lot of rallies in prices, anything associated with SPACs. But they've said that once the fairy dust sort of settled down, then there were a couple of reasons that this, showed a downtrend in its price. Just in case you guys don't know, SPACs are when there are special purpose acquisition vehicles, and those are basically blank check companies that sole purpose is to make a company that's private instantly public. So they have a typical cycle that they go through. When the merger is announced, the SPAC stock will skyrocket. So that's that exuberance I was talking about. And once the ticker starts to trade, retail traders book their profits and look elsewhere. They just sell on the news of the SPAC. So they are very volatile. Yes, you can make a short-term profit on them, but so they're saying that that's what's sort of happened with Clover Health, that it's been the target of short sellers lately, leading to a bit of skepticism around sort of newbie investors. So although some people think the stock is interesting and that it does actually have fundamentals, the SPAC hype, which has faded down, may have resulted in what caused this Clover stock price to fall. So although in this article they think that there is business fundamentals, but there is, as I've mentioned, more work to be done. They need to deal with all the current issues they're facing, and with the SPAC hype fading, we're seeing huge crashes in prices with meme stocks. This is one of the reasons I'm not a fan of meme stocks. I think it's really hard to predict when the crash will happen. Meme stocks are so speculative. I don't think you can predict when the crash will happen, when the rally will happen. It depends on what's happening with like Wall Street Bets and Reddit and that sort of thing. It's really funny because I remember in university learning CAPM, which gives you like a return on an investment formula, and here it is just to show you. So I saw this meme online, so I tried to find it online. So this is the formula for CAPM. So this is the basically expected return on the capital asset that you invest in, and it's usually done by risk-free rate, and beta is your sensitivity, or you could say risk, and this is the expected return of the market minus the risk-free rate. But as a joke, they've added a little spaceship as expected Reddit enthusiasm. Now, how can anyone predict expected Reddit enthusiasm, especially if this coefficient is so big? And these are usually reflective of the fundamentals and the market sentiment, but this can be so unpredictable. Who knows what the next stock that Reddit picks on, or the next stock that becomes meme stock territory is going to be, So that's one of the reasons I don't like meme stocks very much. Now, just for argument's sake, I want to give you guys a bullish article. So Clover Health looks primed to go out of this world. This is on Investor Place, and they've said that it's currently trading at $8.78 per share, which it's lower right now, as we saw. And because of the rumblings on the Reddit message boards, so that little spaceship on the CAPM formula, the Clov stock is expected to go higher. And then people are saying, affectionately, they call the apes, the network of the traders is ready to place their diamond hands on the stock. Honestly, I'm not sure how I feel about the diamond hands concept. A lot of people are like, oh, diamond hands, paper hands fold. Yes, but investing should not be emotional. It should be where you adapt your strategy depending on the fundamentals, the news, yes, of course, if a company has good fundamentals for the long run, then yes, obviously hold on and don't worry about the dips. But when we start getting into meme stock territory and it starts getting speculative, then that diamond hands concept is like saying you're going to hold despite the stock or the company going bankrupt. It's not really being rational. It's taking a very cult-like approach when you are looking at your investments, which is not a good way to go. Now, I know the Q1 earnings weren't good, but I want to touch upon them just to have a quick glance. I mean, their overall assets, their current assets was 809 million, which is a very large amount compared to its current liabilities. And their current liabilities was 173 million. So their current ratio is around 4.7 times. So the current ratio measures a company's ability to pay off their obligations. So 4.7 times is a good current ratio. So they are able to meet their obligations, but that's all fine. But what are they performing like revenue-wise? So their revenue did show a bit of an increase. However, they did still operate at a loss, but an even bigger loss than they did in 2020. So their loss was minus 48.4 million. Now, I just want to add, one of the biggest reasons for this loss was the net medical claims incurred. Could this be due to the pandemic at 214 million? And that's one of the biggest contributing factors to their net loss. So yes, they showed a net loss, but they also showed a net loss on their EBITDA. Their EBITDA was negative 25.809 million. Not ideal. I mean, it's a good thing that asset base is great, but it's not exactly like it's a bit of a tech startup, like a healthcare tech startup, but not one that's got huge investments just in R&D. So I don't think it's justified that they can have such a negative earnings report. So I personally am not investing, at least for the time being. What are your thoughts on Clover Health investments? Are you guys investing? Are you guys bullish? Are you not? So let me know in the comments below what your thoughts are. Don't forget to hit that like button and also share this video and subscribe to my channel as I make new videos every single week. And I also have a Patreon where I post all the trades and the investments I buy in real time, my opinions on the market, and there's also a lot of one-on-one support with me directly, depending on which tier you select. Also remember that I'm not a financial advisor. These are just my own personal opinions. Make sure you do your own research before you invest in anything. I also have a link down below for WEBULL where you can get 2 free stocks when you invest your first $100, and those 2 free stocks can be worth up to $2,000. So guys, thank you for coming, and I look forward to seeing you guys in my next video. Bye!